Everyone thinks America is still the safest borrower on earth, but that assumption just broke. Foreign central banks are dumping U.S. debt, not slowly, not quietly, but decisively. And the scariest part isn't who is selling, it's who isn't buying anymore. Because once you see the buyers disappear, you realize the problem isn't a recession, it's a trust collapse. The headlines keep you distracted with inflation prints, rate cuts, and stock market highs, but those are surface-level signals. Underneath them is something far more dangerous happening in the plumbing of the global system, the place where confidence either exists or vanishes overnight. And when confidence leaves a debt market, it doesn't come back politely. For decades, the U.S. ran massive deficits without consequence, not because it was responsible, but because it was trusted. The dollar sat at the center of global trade, and Treasuries were the world's emergency savings account. As long as growth existed, stability existed, and the dollar ruled, the system held. One of those pillars is now cracking. Two are wobbling, and the third is being actively challenged. America doesn't fund itself like a household. It funds itself by selling promises, treasury bonds, to the world. Those promises only work if buyers believe the future will be stronger than the present. Now interest costs are exploding. Debt rollovers are accelerating. And instead of locking in long-term funding, the U.S. is leaning harder on short-term debt. That's not confidence, that's survival mode. And survival mode works until it doesn't. Short-term debt is cheaper today, but it forces constant refinancing, which means constant judgment from the market. Every auction becomes a vote. Every yield spike becomes a warning, and lately, those warnings are getting louder. And here's where it gets interesting. The Federal Reserve buys some debt. Domestic banks buy some, but the backbone of the system has always been foreign buyers, especially foreign central banks. They don't chase returns, they chase safety. Which is why what they're doing right now matters more than anything else. Recent data shows foreign official institutions selling more U.S. debt than they're buying, not rotating, not rebalancing, but exiting, and that almost never happens. You've been misled into thinking this is about yields, but it's not. It's about sovereignty. Countries are no longer asking what pays more. They're asking who controls my future, and that changes everything. Japan, one of America's most loyal creditors for decades, is stepping back, not out of hostility, but out of self-preservation. The math that once worked no longer does. As foreign capital exits treasuries, the U.S. must offer higher yields to attract new buyers. Higher yields mean higher interest costs. Higher interest costs mean more debt issuance. And that feedback loop isn't linear, it's exponential. And yet, the stock market keeps going up. If America is being sold, why are equities still soaring? This is where most people get the story completely wrong. Capital isn't leaving America. It's changing where it hides inside America. Debt requires trust. Stocks require belief. And belief is easier to manufacture than trust. Stocks have quietly become a store of value, not a reflection of productivity. When money fears currency erosion, it flees into assets like homes, gold, and equities. Not because they're better, but because they're scarce. That's why prices rise even when fundamentals don't, and why markets detach from reality. Asset inflation protects those who already own assets and punishes those who don't. Debt service drains public resources. Asset inflation concentrates wealth, and the system slowly tilts away from productivity and toward preservation. This isn't capitalism breaking, it's capitalism finishing its cycle. Foreign central banks selling U.S. debt isn't a collapse signal, it's a confidence signal. It says we don't trust the long-term management anymore, and once that belief spreads, no rate cut can fix it. The question isn't whether this matters, it's how long the illusion can last, because debt survives on trust. And trust, once cracked, never snaps back cleanly. In the next video, I'll show you where that money is going next and why the next global safe haven won't be what anyone expects. Because when the world stops lending to you, it starts preparing for a future without you.